Welcome to the first training video for the flip method. My name is Uhriaha Aguilar and I'm the founder and author of Static in the Markets. Before we begin, a quick disclaimer. Everything in this training is for educational purposes only. Nothing here is financial advice. Trading always carries risk and you are responsible for your own decisions. Alright, let's get started. What is a flip? The flip is when the market changes directions. If price has been moving down and then starts moving up, that is a bullish flip. If price has been moving up and then starts moving down, that is a bearish flip. A flip happens when price hits an important level. I call this a point of interest. This was inspired by ICT. The price stops breaking old lows and begins breaking old highs, or the opposite. The easiest way to picture this is price is walking in one direction, hits a wall, it turns around and starts walking the other way. That turn is the flip. An important component to a flip is called a sweep. Inside the flip, we look for something that's called a sweep. A sweep is when price reaches back and takes the previous high or low. It's quick, it grabs liquidity, and then moves away with a strong bullish or bearish, upward or downward candle. There are two kinds that you'll see. A high probability sweep. This is when price taps into a level only with a wick and then closes the candle body back above or below it. That tells us the flip is healthy. A low probability sweep happens when the candle body closes beyond the low or the high. This warns us that the flip might fail. The protected level. Every flip has a protected high or a protected low. This is the spot where the flip began. As long as the price stays on the correct side of this level, the idea for this trade setup is still valid. If it breaks this protected level, this trade setup is no longer valid and we move on. The flip zone. Next is the flip zone. This comes from the candle that caused the flip. You draw it out using the fib tool, using only the 0.3 and the 0.5 levels. In a bullish flip, you want the candle bodies to stay above that zone. In the bearish flip, you want the candle bodies to stay below it. This gives you confirmation that the shift in structure is real and your trade setup is valid. EMAs and VWAP. Now let's talk about the EMAs and the volume weighted average price, or VWAP. The 20 EMA shows the short-term trend. The 200 EMA shows the long-term trend. When both agree, or the 20 EMA has crossed above or below the 200 EMA, depending on if you're bullish or bearish, you have a stronger setup. The VWAP shows the average price that everyone has traded at in that session, day, week, month, or year, depending on the time frame that you're using. Above the VWAP tells you that buyers are strong and your bullish flips are more than likely to play out. Below the VWAP tells you that sellers are strong and your bearish flips are more than likely to play out. When the flip matches the EMAs and the VWAP, you have an alignment that makes your trade setup stronger. The flip pattern. The flip method follows a simple pattern. For a bullish flip, you will see a low, then a lower low, then the flip, then a higher high, then a sweep of the pulled back level inside that zone. For the bearish flip, you will see the opposite. A high, then a higher high, then the flip, then the lower low, then the sweep of that pullback level inside the zone. This keeps you focused on clean structure instead of guessing. In this photo, you can see the full sequence has played out in this chart. You can see how every concept from this trading had blended together to create a strong bullish setup. We started with clean structure, a low, lower low, then a shift where price stopped breaking lows and began breaking highs. That market structure shift is the foundation of this flip. We got a high probability sweep where the price only tapped the level with the wick and immediately rejected. That told us that buyers were stepping in and the new direction had strength behind it. Next, the protected low stayed safe the entire time. Price never broke beneath it, which confirmed that the bullish idea was still valid. When price pulled back into that flip zone and swept that low for entry, it respected the 0.3 and the 0.5 of those fib levels, then reclaimed them quickly. This is exactly the type of reaction we want to see before entering. On top of that, the 20 EMA, 200 EMA, and the VWAP were all in agreement. Price was trading above the VWAP, which gave strong bullish confirmation. The short-term trend, the bigger trend, and that fair value line were all pointing in the same direction as well, which also added to that strong confluence. And finally, momentum matched the idea. The candles moved cleanly, the structure stayed organized, and there was no choppy behavior fighting against this setup. All of these pieces together made this a great bullish flip method example. When structure sweeps, protected levels, EMAs, VWAP, and momentum all align, you are no longer guessing. You are taking a trade with a complete and proven pattern that is respected on multiple time frames. In closing, this is the foundation of the flip method. Keep it simple, keep it repeatable. The more you study structure, sweeps, and protected levels, the clearer your entries and exits will become. Thank you for watching this first training video, and I'll see you in the next lesson.